Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investor. And today, like every weekend, I want to give you my weekly update for the second week of 2021 and will give you an insight in my real money portfolio, give you some news about my stocks in my portfolio, and then also show you the whole performance of the last week, but also overall. And so I'm as transparent as possible with this real money North American portfolio I have. And let's start with the news of the week. And so on Friday, the Q4 earnings season starts with the banks. And so also two of my banks in my portfolio released their Q4 earnings. And let's start with Wells Fargo, one of the banks in my portfolio. They published their Q4 earnings on Friday, as I said, before the market opening. And Wells Fargo Q4 earnings beat the expectations, but the stock failed on lower revenues. Successful cost-saving initiatives and unexpected release of reserves supported Wells Fargo fourth quarter 2020 earnings of 64 cents per share, which surpassed the SEC consensus estimate of 59 cents. Also, the bottom line compared favorably with their prior year quarter figure of 60 cents. Increased gains on equity securities and higher mortgage banking revenues supported the bank. Moreover, the company reflects prudent expense management. Further, a net benefit to provision of credit losses was reported during the quarter. However, reduced net interest income on lower rates negatively impacted its result. In 2020, earnings per share came in at 41 cents compared with $4.05 in 2019. The reported figure, however, surpasses SEC's consensus estimates of 38 cents. The quarter's total revenues came in at 17.9 billion, lagging the SEC's consensus estimate of 18 billion. Further, the top line was lower than the year-ago quarter, 19.9 billion. Revenues for the full year 2020 came in at 72.3 billion, missing the SEC's consensus estimate of 72.5 billion. Also, revenues edged down 15% year over year. And so with this reported numbers on Friday, the Wells Fargo stock just dropped massively, almost 8% to now $32. And the reason for this drop was that they fall short in the revenue sector. And this seems like the reason for this high drop. And as I mentioned in some videos before about Wells Fargo, also in my total analysis of Wells Fargo, you find this here up on the screen, the link. I mentioned that the biggest problem with Wells Fargo is that there is, after all the scandals, no trust. And so Wells Fargo, I think, needs a lot of time to build this trust up again. And of course, next to that, they have the same problems as every bank and every insurance in the financial sector with the low interest rates overall. It's really difficult to make money in the banking business. And so Wells Fargo dropped now after their rise over the last few weeks immensely. And I will just keep my position. There is no reason to sell right now because I really believe they can make the turnaround, but there's also no reason to add because they are in a vulnerable position overall. And so we will see how this will work out. I would just stick with my position so far. And so overall, Wells Fargo is on last place in the performance in my portfolio with a performance right now of a little bit over 3%. And the second bank who reported the numbers on Friday, the Q4 numbers on Friday, was JP Chase. And JP Q4 earnings beat on reserve release and fee income. Unexpected large reserve releases along with solid capital markets performance drove JP Morgan's fourth quarter 2020 earnings of $3.79 per share. The bottom line handily outspaced the SEC consensus estimate of $2.72. Results included credit reserve releases. Excluding these, earnings amounted to $3.07 per share. The company had earned $2.57 in the prior year quarter. So overall, very good numbers for JP Morgan. And JP Morgan for me is best, the most solid bank in the US, and so it's also a big part of my portfolio. And after JP Morgan reported these numbers, the stock also fall 1.79% on Friday to now $138 in an overall very weak market. So this reaction have not so much to do, in my view, with these reported numbers, more with the weak market on Friday overall. And so I'm very happy with my position in JP Morgan. I will not add at this moment because the price of $138 is already a little bit up over their intrinsic value. And you also find a deeper analysis of JP Morgan Chase and the whole business model on my playlist of my portfolio, or here just up on the screen is a link to this video. Check this out too. There are also calculated the intrinsic value of JP Morgan. And so overall, I was able to buy JP Morgan here in April, and then also again in July a little bit. All the green dots here is the times when I bought JP Morgan, sometimes just after I get the dividend and then just reinvest the dividend. So and overall, my purchase price is $93.99. So let's say $94 in average. The performance right now is almost 49%. So very good investment so far, and I will just stick with it. And then I'm very sure JP Morgan will be very good and very solid long-term investment because, as I said, for me, it's the most solid bank in the US. And then last week there were no dividends received, so nothing happened on this front. And I also didn't bought or sell any of my stocks, so was kind of a quite week. Then we come to the winner of the week. This was this week Intel, after they reported that the new CEO, Pat Gelsinger, will take over on the 15th of February. And then Intel just rises up immensely. Just in the last week, you see here the time span, it rose over 11%, almost 12%. And so Intel was a winner of the week. And you find also deeper analysis of Intel on my channel or here up on the screen. And there I also calculated the intrinsic value of Intel and tell you why I think Intel is still a great company with very good cash flows. And now with the new CEO, of course, there's a good chance that they also can come back to a path of innovation. And this is the most important for Intel after they losing market shares lately. And then where's the winner is of course also a loser. And this was this week mastercard. Mastercard just lost in the last week over 7%. And I think I will make a video next week and just look at this situation a little bit more and why there was this kind of big loss over the last week, and then also tell you what I will do with my position. So far so good. For me right now there is no reason to sell Mastercard. It's a great business. It's just very high valued. And also for Mastercard you find a deeper analysis on my channel or here up on the screen. You also can find that, and also there I calculated the intrinsic value, and then you will find out that Mastercard right now is traded quite a bit over the intrinsic value. And with that, just take a look at the weekly performance overall. As I said, Intel was a big winner with almost 12% last week. Mastercard the loser, and then you see all the other stocks in my portfolio and the weekly performance of them. And by the way, if you're new to my channel, you'll find a deeper analysis to all of the stocks in my portfolio on my channel. Up here on the screen, you find a link to the playlist of my portfolio. Feel free to check this out, and hopefully you'll find some value in that. And if so, just subscribe to my channel and follow me on my road here as a long-term value investor. Last but not least, take a look at the overall performance since the 2nd of December 2019. This was a day when I started this portfolio, and since then the overall performance of every of my stocks is like this, with the biggest winner Caterpillar right now with 74% performance. Overall, Jack Henry on last place with 1.87% performance. So overall, All my positions are in the green. That's very good. And here we also see the pie of my portfolio and see how big is the impact of every of these businesses in my portfolio. And with the gains of the last week, now Intel is the biggest position in my portfolio, followed by Scotiabank, Berkshire, American Express, JP Morgan, and so on. And very important for me, also 20% of cash. This is a little bit much for me, and I would be happy if it would be around 15. But right now, it's difficult to find good investments. I would be very happy if Intel would be back at 50 just to add more. Now I have to think about what point I will add even more. As I mentioned in other videos, I want to put the position to around 10% of my portfolio. And the same is with Berkshire, which is also still under the intrinsic value. I also want to add here, and maybe in next week I will add a little bit here or there. For bigger investments right now, it's just very difficult to find a good risk and reward. And with this portfolio, I have a performance since the start at the 2nd of December 2019 of 44.17%, which is an outperformance of over 23% to the S&P 500 in the same time span, and that's great. That's a really great result for me, and so I hope it will just continue like that. We will see how this will work out. So that's it for today. Thanks for watching. If you liked the video, please give me a thumbs up, ring the notification bell to never miss another video, and subscribe to my channel and help me to reach the 1000 subscriber mark. This is my goal for the next 3 or 4 months, just to reach the 1000 subscriber mark. And this motivates me to go on and regularly upload videos with analysis of good businesses, calculate intrinsic value, and so on. And you can expect this on this channel, just high quality stock research for long-term value investor. And I will upload 2 to 3 videos every week, and every weekend my weekly insight to my portfolio, so as transparent as possible. And if you like this way, just follow me and subscribe to my channel. Then see you the next time with another analysis of another stock. See you then. Take care. Bye bye.